Hey, welcome to the closing beat, everybody. Happy Fed Day. Hope you had a great day here today. Welcome to May, right? May 1st, first day of May. If you've never participated in the markets around May or never really tuned into your investments, May through October is historically the roughest stretch, roughest 6 months you can put together market-wise. Doesn't matter how you put them together, May through October, very tough. That's why there's a phrase called sell in May and go away. So to be fair, we're teaching advisors here at Jazz Wealth, and the real reason that I come here every day is to just teach you, to show you what effort we go through to help our customers. And one of the things that we do is on Thursday nights, we do we call it Wine and Wealth sometimes, where we just get together, I share something new in a really short class. This Thursday, we're actually going to cover the markets. And one of the things that I do, without going on a rant here, I just want to explain how this goes. We take data from what to expect a month going forward, 3 months, and so on. And then we just share that with our customers. And we go, here's a bunch of studies to show you what the markets do, what different sectors of the markets do, what global economies do, just so you know what to expect the month going forward. Well, then the next month when we do that class again, I pull the same data and I go, see the data that we showed you last month? It came true, right? Because the markets move based on data, which is always emotion. So people go, no, it trades on emotion. Well, that's the data, right? So this week will be no different. So the class will be to show how April panned out exactly how the data shows. All of our investors knew exactly what to expect. But this one's more important because sell in May and go away. A lot of people are going, do I sell? Am I supposed to just go away? I'm going to show you the difference there from May through October, and then the November through April time period, just so you could see like what to expect. But for the rest of you, it's May. Now you know this is going to be a rather rough time for the markets here. But let's go through it because I share data with you as well, and I want to show you that data also does pan out so that you guys know how the markets work. But anyways, you got the Dow lower by 163, the S&P lower by 22, Nasdaq 45. And if you look, it all happened when Fed Chairman Powell said one word. He was talking. Then somebody asked a question about inflation, what they were going to do. And right then, on that second, that's where the market started selling off for his response. And that took us into the close for the day. So very weak start to the month. You've got if you look at the S&P 500, it's about 0.75% decline. Now, yesterday we mentioned that on the Fed day, when they leave rates unchanged, historically that's very bullish. However, in this recent bull market, remember I said that the average sell-off on the day is about 0.25%, and it's been getting worse and worse. So you now know from that data yesterday, I wouldn't expect a massive, impressive rally today. The key is a month later. So the markets finish a month later on average of 1% higher, the S&P 500 anyways. So you now know, okay, one day doesn't make a new trend, but historically you've got the odds of having about a 1% gain as we get a month down the road, and that's really what we care about. One day, who's investing for one day, right? Okay, we've got 91% of the S&P 500 in the green for the year still, even after today. Here's the S&P 500 on the screen. You can see a little sell-off today. The problem is, if you dig through the S&P 500, you now have 120 names that have moved back below or are still below the 200-day moving average, right? So you've got very, very nice strength here in the markets, great rally, but now there's a lot of weakness of stocks that have been selling off and pushing back below this red line, which is the 200-day moving average. Now, we had some good news to start the morning. Private payrolls came in at 275,000. I think we were only expecting like 95,000. I didn't write it down, but I do know it was the sixth best report since 2006, which I believe is when ADP started reporting that. Exactly there. So anyways, you've got some real weakness starting to show up in the markets in the short term. No reason to panic yet, right? And you're not like freaking out, but you have to notice that as you look through the different sectors, you see these stocks starting to pull and pull and pull. We keep tons of data here. We're constantly tracking things. And one of the things that we track is stocks making new 52-week highs, 52-week lows, breaking below or above major moving averages. And how many are staying down there? How many refuse to show strength? So you got a lot of weakness there. So anyways, long way to say basically, welcome to May. If you look at the Nasdaq today as well, it also started to pull back. Started off great thanks to Apple, but did see some weakness. And that darn Russell 2000, man. If you've been here a couple times, you know we keep talking about the inability for the Russell 2000 to move back above this range in any significant way. But I want you to notice something. If you're one of our customers, you can go into the dojo and play along on these charts with me as well if you feel like it. And one of the things you can do is, you can draw lines. So I'll just make this quick to show you. Look at the higher lows, right? And if you're not familiar with what that means, you've got the Russell making equal highs, just refuses to get up there, but it won't make new lows. It's making higher and higher lows. See how the line is sort of like compressing. And so you have this sort of like pinch getting ready to happen here where if we move just a touch lower, you spark a ton of selling. If we move just a touch higher, we could get the momentum we're looking for. So the Russell 2000 is day by day getting closer and closer to a very, very important turning point here. So we're going to find out what's going to happen there real soon. All right, so that's the S&P, major indices, Nasdaq and the Russell 2000. If we dig through the different sectors today, I keep a list of the sectors off to the right for our customers. You can dig through them, or you can just type whatever name you're looking for there. I do want to point out from yesterday, we talked about the transports. Hey, that's a lot more lines than I thought. We got the transports headed back towards this price support, but also the 200-day moving average. If you like transportation stocks, that's your zone, right? That's the sort of short-term zone that all the technical traders are going to be looking at there. Railroads. The railroads in the transportation sector did really well. They had a lot of great earnings. We could go through the names. I've been through them a few times with you. CSX, huge gap up on earnings. Norfolk Southern, also great gap up on earnings. Remember they had that week where everything was going really, really well. Kansas City Southern. And since then, they've started to take a break. That's weighing on the transportation stocks. And also you have UPS that really kind of cratered and continues to be weak. So that's not helping transports either. But you could look at it and say, this sector sucks right now. Or you could look at it and say, hey, it's in the middle of a bullish uptrend coming into some kind of price support where other technical traders might find a good little support area between like 190, 187, somewhere in there. And maybe that's an opportunity to beef up if you happen to like the transport sectors. I'm, of course, not making that as a recommendation, not allowed to, but you get my point. All right, tech. So tech started higher on the day, all thanks to Apple, right? We talked about Apple's earnings yesterday. Very strong start to the day. VGT, if you're one of those participants, we've been mentioning how that's about 15% Apple. All was good to start the day, but you had that broad-based sell-off. I don't think there's really no reason to panic with this one at all. Still very much in an uptrend here. XLK is about 17% of the XLK is Apple. Don't hold me to that. Somebody, maybe if you know the answer, you could tell me. I believe it's about 17%. I can't tell you. Anyways, Apple, the driving force behind that. Before we move on to Apple, let's take a look at oil. You got oil weaker on the day. You had really weak inventory numbers. So the price of oil started to come down. On Wednesdays, provided that there's no holiday, oil inventories numbers come out, and they showed an increase to really the highest level since about 2017. Not off the charts, but still a little bit of pressure in the short term. Sort of adds to what Mr. Trump wants, which is lower oil prices. So far, he's getting what he wants. Real estate, really, I mean, you could look up at the top. Real estate was really the only sector in the green today. Whether you use the FREL, you could use ICF or any number of other ETFs to look at this. Sector ETFs, I mean. Basically, like you see, that's the only one in the green today. So one sector away from being totally weak on the day. And where's Bruce? Where's my man Bruce? Been talking about the euro dollar, the oversold condition for the euro dollar. The euro actually had a decent little bounce there. I don't really have it on this chart, so I can't show you there. But aside from today, nice little bounce, man. We've been talking about that since last Friday. I gave you the hint. Where's my forex traders out there? Trying to help you out. All right, more importantly, and what most of you care about, Apple. So you had Apple reporting earnings. We talked about it yesterday. Really a textbook earnings, in my opinion, from everything that they did. I get it. iPhone sales saw the uptick, but really, is it really? I mean, everybody had a chance to dig through that. All the same data from yesterday. I mean, dug into this here. You got the whole concept of they beat on revenues by a mile, beat on earnings by a mile, beat on revenue by about 600 million, services up 16%, just lots of good stuff there. Dividend higher by up to 77 cents. $75 billion stock buyback there, so a well-deserved 5% gain for Apple on the day. If you happen to be a holder of Apple, and it does stick here in this 210 while the market shows any weakness like it did today, that's a good sign. We'll cover it as we go. I'm sure a lot of you are participating in that one, so we'll watch it with the markets here. AMD was higher to start the day. They actually reported earnings that were better. Revenue was better, just barely, right? If you look at the details of this one. Margins, overall margins. Here's yet another company that says, look, we may be slowing a touch, but it doesn't matter because not our profit margins, but our overall margins, meaning what we're able to charge for our products, we keep raising them. So here's another company. I keep trying to point these out to you where those of you that think the economy's slowing, it's okay, yeah, economy's slowing, but margins keep going higher. Companies are able to do that. Shares are still higher by over 50% on the year, so a little downtick today isn't scaring anybody. CVS coming off the bottom there a little bit, 5.5% gain on the day. Earnings beat by 12 cents. I didn't write it down. I think it's 12 cents. Revenue beat expectations as well. Company raised their guidance going forward. A lot of this is due to the Aetna purchase. Remember, they bought Aetna. So a lot of that is still the case, and the stock is still lower by 10%. Here's a great example, by the way, of one of the stocks on the S&P that's just not over the 200-day moving average, right? It's weak overall. However, some stocks are just sitting down here while others are selling off over the last few days. That was really sort of my comments there. We'll go through just a few more here. Estée Lauder. So Estée Lauder did sell off today. We own this one. It's one of the stocks that we own in our funds. It ended up losing about 1%. Started at 52-week highs, very strong. Total day traders in here. Whenever you see a stock that's moving up and then gaps sharply higher, that's a fade for them, so I totally understand that. In addition, if you look at all the people that have a profit in here, they saw a large gap up today. Some people were like, hey, I got a nice profit. Let me sell some of my shares. And for that reason, you don't look at this sell-off as a reason to panic, at least just not yet. All right, Garmin pulling back a little bit, down about almost 7% on the day. Earnings, man, they beat on earnings, beat on revenue. Profit margins decline. So we've been talking all these companies that can raise their margins, charge more. Garmin is not one of them, and it shows how important that metric is for investors because everything else was great as far as Garmin goes. Not too bad. 12% increase in their overall revenues, profit margins tighter, right? So they've got to work on cost cutting. They've got to work on finding a way to raise those margins, something. Alibaba, that's my technical chart of the day, breaking out of this range. Doesn't this look similar to the Russell? Here's a great example of what I was talking about. Technical traders. Now, I don't know that this is like something that keeps going, so don't like hold me to this. I get in a lot of trouble for making these sort of recommendations, but this is not a recommendation. This is just an observation. So look, it looks just like the Russell 2000. What happened today? Broke above that area there. Technical traders dove in. Had some market weakness, so that's understandable that it pulled back. But there's the turning point. That's exactly what I'm talking about in the Russell. You have a moment in time where when one thing happens, the masses will come to it. So Alibaba actually looking better over the sort of midterm. Alibaba has done really well. They report earnings on the 15th, so you can bet that'll be in the news. We'll cover that. Royal Caribbean, these guys got $3,300 out of me coming in July. I'm going to actually take a vacation. I'm like, you know what I mean? Like I'm not a vacation guy. We live in Florida, so aren't we always on vacation? But Royal Caribbean, they said bookings did really well. There's a lot of metrics that they follow here. I just happen to like following the cruise liners. But they beat on earnings, beat on revenue. Revenue overall was up 20% year over year. Some of that's going to be my ticket on the cruise. Now, there's a couple metrics that they look at here. If you follow cruise lines, we like to see revenues from the ticket sales, right? People obviously buying cruises. Like me. So we like to see that that's doing well. And then once the person's on board, that's a metric that they track as well. How much do people blow once they're on the ship? Food's included, funds included, but how much can we get them to spend when they're stuck on the boat? That's a big one. You look at those two numbers. Ticket revenues for Royal Caribbeans were up 20%. Huge beat for them. Onboard revenues were up 21%. So not only are more people buying cruises, but when they get on the cruises, they're spending the dough, man. That's crazy. So Royal Caribbean had a great day today. It's one of the stocks we own in our portfolios. Carnival Cruise, by the way, also got a little sympathy rally out of that. They'll report here soon, so we'll see what happens. Netflix is another technical chart if you're looking around there. I know a lot of people are waiting for it to get to 400. Had a lot of conversations with you people that are looking for 400 as a target. It's getting there, right? Slowly but surely. That one's also looking pretty good here in the short term. Earnings after hours here. Qualcomm is one of the stocks we own as well. Earnings beat, revenue beat. Looks like the focus is going to be on guidance and the Apple payment. So they did factor in the Apple payment. Wasn't it already kind of factored in? And look, this is people, don't let that, we'll skip it. The Apple settlement's already baked in, right? What else is this? This massive rally. That's people pricing that in. So that shows up on their earnings, and I believe the next one as well. Looks like the guidance going forward. It was sort of, you would call it mid-range, right smack in the middle of what Wall Street's expecting. Stock lower a little bit. Square reporting earnings as well, or just reported earnings. Beat on revenue, lower guidance. Yep. Let me see if I can find the gross payments for Square, because that's a big metric everybody likes to look at. Entertain them while you navigate through your notes. Gross payments, just under estimate. They missed. Okay. Well, that explains that. Lower guidance, lower gross payments overall. Investors won't be happy with that. So there you go. A little bit of a discount there, and possibly more of a discount if you like waiting for Square trading at a discount. Here's your opportunity. Potentially, I'm not telling you what to do though. All right. If you have any questions, I'm happy to try to answer them for you. Otherwise, I will wrap them up and get back to work. Maybe no closing beat on Friday. I'm sorry. I gotta go couch shopping. Ugh. I'm trying to get out of it, but she says no, I gotta go. So unless I can talk her into buying something online, maybe no closing beat on Friday. I don't know. So question on Ulta. Ulta overall, I know today was a rough day, by the way, if you want to pull it up on the charts there, down by about 4%. Overall, not bad. I mean, it's a good retail stock that's performing well. Here's a great example of margins. These guys, ridiculous margins. So as long as that stays the case, they're able to charge as much as they do. We'll see. Yep. Shouldn't you invest the vacation money and hang out at the beach? Hey, that was my idea. I'm like, why do we need to go on a cruise? We just go get a boat and then we can just go out there and sit for a little bit. We'll put the music on, whatever. But my daughter's turning 18, or she is 18. She's graduating. We don't do many vacations, so we promised we'd start doing a little bit more with her before she grows up and moves on and does her thing, you know. Yeah. What's going on with Disney? Disney's overbought in the short term, I can tell you that. I mean, it's obviously very, very great performer, but we've been talking about this overextension in the short term. I've been pointing it out on the charts. We'll do that for you now. Maybe not, because the charts don't want to come back. No? Hello? Well, Disney's a little overextended in the short term. Natural pullback, totally cool. It could even pull back another $3, $4, and it wouldn't be that big of a deal at all. And that movie apparently is killing it. Yep. Oh, you like the alphabet now with the price cut? Remember, so here's the rule of thumb. When a stock is moving in one direction and it either significantly sells off in the other direction or gaps lower, that's not the day that you want to bet on a reversal, right? That's a fresh wound. So with Alphabet, I'll keep the same comments I had yesterday. That's a fresh wound. You do not want to be the first to dive in while there's still blood in the waters there. Give it some time. Relax a little bit. Go do something else. Come back to it. Keep it on a watch list. All right, healthcare hitting a lot of resistance. I see the questions there on healthcare. The sector as a whole, a little bit of resistance in a short term. So if you get names like UNH that start to sell off like they are, that's a textbook technical pattern right there over the last 3 days from people that like to follow candlesticks. So you'd expect to see a little more weakness to the downside. I know some of you are looking at that as a discount and just waiting for an even steeper discount with a little market weakness, right? Think this through. We're all like, oh, the markets fall. We get scared. Use it as an opportunity. Where do you want to go if the markets get weak and start to pull things down with it? I know a lot of you like healthcare. I'm not telling you one way or the other, but think what happens. If the markets get weak, everybody goes to the weak stocks and the weak sectors and starts pulling those lower. That could be your chance to go find the discount that you've been waiting for. Always a good thing when the markets sell off, and some people, not everybody, but some people get scared. That scared sort of trading or investors in the short term, that really helps you. Case in point would be December. $44 billion. $44 billion came out of 401ks. That gives you an opportunity, right? Gives you a shot. Oh, other Dustin says, thinks gonna grab some Google and Apple. I'm out. I'm not saying anything. Yeah, I can't say anything there, but I wish you well. And so we'll see. What's with the gold drop? You notice, so here's what happens with gold. Gold never just takes off in one direction and then continues. It never sells off aggressively in one direction and it just goes forever. Gold is very much a trending, it's like oil. It's very much a trending sector. Right now we're in the middle of a downtrend. There's no reason visibly to say that gold should reverse course and start a new uptrend. You got to be very careful with gold and oil as well. Very much trending areas of the market. Look, now that you've got rates a little bit higher, you've got, well, a little bit of jello on the plate in the market, so you've got areas to put money in the market. Gold has sort of lost its shine, right? Because there are other places with maybe less risk, less volatility that you could put your money, where people usually only look at gold as protection. They look at it as a hedge. They look at it as a, oh my God, I'm scared. Well, if you're scared, for years you had nowhere to put your money because bonds weren't worth a darn, so you had gold. Now you got at least some people have more choices. So, we'll see. We'll see what happens. That's my quick 2 cents. Tesla, I love it. I love it. Tesla's selling off a little bit more. I know it's a little pain in the short term. Waterfall drop. Waterfall drop. That's what you hope for. 200. Financial investors looking for 200. That would be some pain there. There's a lot of people that are betting heavy on that stock. Especially the guy from Citron. He actually changed his mind. Took a big loss. Nobody talked about it. The guy's one of the most vocal and sort of edgy big investors out there. He gets attention from his language. He's not very clean. But he said he was short Tesla. He was all about it. And then out of nowhere, he's like, yeah, we changed our mind just before earnings, and the stock took off, right? Now, the other day, he goes, you know what? We're done with Tesla. What a horrible company. He's totally flip-flopped back on his position. Lost a little credibility there, in my opinion. But we'll see. Discounts are discounts. You're scared for May, to be honest. So yeah, I'm going to lay it all out, right? So on the Thursday class, we'll go through it, what to expect. May is a rough month. It tends to be a quiet, rough month. So I'll just give you a little heads up. If you're not one of our customers, I'll just give you this one. How about that? Free, right? So May tends to be like this. Very, very quiet. And then all of a sudden, bam, big gain. Then back to quiet. Then big loss, back to quiet. So it's one of those where most of nothing happens except middle of the month. I'm going to show our customers that. Middle of the month is pretty interesting, but for the most part, it's like quiet and then massive moves kind of catch you off guard. And that's just lower volume. That's, people making decisions, but with less people there to accept the other side of that trade. All right. I think I did a good job. I don't know. Let's see. Okay, yeah, I covered everything else. Let me just grab my notes here real quick. Discovery tomorrow with earnings. Kellogg's with earnings. Expedia. Gilead Sciences, if you like that sort of thing. Wynn Resorts. I saw Caesars reported after hours here. Not bad. A lot of people in Vegas, apparently, if you look at Caesars after hours performance. And then U.S. Steel, ticker symbol X, if you want to take a look at that. Those will be reporting earnings tomorrow. What else? Twilio reported earnings, beat on earnings by a couple cents there. Stronger revenues, raised guidance. I didn't cover that one. Home Depot, that's in the ticker below. CFO retires. Asia and Europe were closed today, by the way. So if you look at the ticker, nothing changed overnight there. And now I think we've done it. All right, enjoy the rest of your day. We'll see you tomorrow. We'll do this all over again, and enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.